Schult.
It's me, Chris. It's Sean.
Hello.
Sorry, I'm in darkness
Right,
here.
do you know what? The other day, who was on the session the other day? Was it Tuesday? And
And then
that
that guy popped up at the end.
random dude popped up. That freaked me the fuck out because I was like, I'm pretty good with names and faces. I'm really good with names and faces. I am gonna toot my own horn, toot to toot. Okay, I'm really good with names and I'm really good with faces. This random geezer popped up, and I was like, who the fuck? Like, I was trying to obviously present to you guys and keep the conversation going, and I was like, I don't recognize this person. Have we got like some sneaky invader inside the community that has like snuck his way in, or is it somebody that I've never seen on a camera before? Because I had that. There was a guy called. Does anyone remember Rick? But he was actually called Jonas. It was like X Rick X, and he had like his picture was like a guy on a BMX with a big helmet on. Anyone remember him? He popped up on a camera like about a year after he joined. I was like, "Who the fuck are you?" Turns out it was Rick. Anyway, all right, Sean, how are you doing, mate? You good?
Yeah, good, good. I'm
Good,
looking
good,
forward to this
good.
one.
Yeah, so well, let's get stuck in because I've only got. I mean, well, potentially if this guy doesn't message me back, potentially we've got longer, so I'll keep an eye on my phone. Let's get stuck in. So look, what a fucking day, fellas! What a day! Oh, do you know what? When the fundamentals align with the technicals, it doesn't get much better than this. It was just beautiful. It was oh, actually, sorry. Let me go back. Let me go back a step. First things first. Rowan, welcome to the team, man.
That my guys.
On you. Have you got your laptop set up yet?
No, I got to pick it up tomorrow.
Ah, okay. Okay, what'd you go for? Did you go for something fancy?
Oh, I just went for a little cheapy thing
No. All right,
just for
fair
the
enough.
time being.
We'll do the job. Nice. Well, good to
Yeah,
have you here, man. Rowan's joining us for our January boot camp. We now have, I think we've got 4 spaces to fill now in the boot camp, which is really, really cool. Those of you who are on the boot camp, which I think is only 2 of you right now, it is looking more likely our kickoff date is going to be the 21st. So just to remind you guys that don't worry about your 16 weeks effectively. It won't start until the 21st. So up until this point, this like I say, so Sean, you've been here for a couple of weeks. Rowan, you'll have been here for a couple of weeks by that point. Um, Effectively that's going to be added on to the end of your mentorship. So Sean, you're going to be getting best part of a month for free at the end of the 16 weeks. All right. So yeah, it's the same 16 weeks wherever we start. The reason for that, just so you know, because I think the spaces will be filled by then, is a couple of the guys aren't going to be available to start on the 14th. And I would really like us all of us to be there on those first sessions for the obvious reasons. All right. So the 21st will be our official kickoff date and it's not going to be
happy
changed.
days.
Cool.
Yep.
All right, is that all right with you, Sean, as well? Cool, nice one. Matt, welcome, dude. How you been, man? Haven't seen you in ages. How are the cinemas?
Yeah. Oh, good. Yeah. Busy, mate. Busy. Well, I'm not busy now, but they have been. But yeah, all good, mate. How's things?
Tell you what, I'm very excited. I'm going to one of the new View cinemas with their brand new recliner seats this weekend.
Oh, God.
What?
Odeon, mate. Straight to Odeon, not you.
Odeon? Nah, well,
Yeah.
we've got a Tivoli, which is owned by Everyman,
Oh, yeah, yeah.
and
Yeah, they're nice, aren't
that's like chaise lounges and like waiters.
they?
Like
Yeah.
they bring hot food to you. You can order a burger and chips, and you eat it in the pitch black. It's
Yeah, it's different
horribly
level, isn't it?
messy.
It's not like when we were kids.
No, I know. Right, let's get stuck in because, like I said, if this guy does turn up, then I'm gonna have to go. Look, beautiful day, guys. It doesn't get much better than this. When trades play out like this, it's just fucking fabulous. So let's just before we get stuck in, let me just close all of this shit. We don't need any of this. Let's just have a chat. We're gonna focus on the USDCHF trade because I know that's the one that we're here for. Who asked about the breakdown? It was Anton, it was you, wasn't it? So um what I'll try and do more of, guys, is these pop-up sessions. So
Yeah, it was me.
it was, yeah. If you guys have a question or if you want to see a breakdown on something, rather than recording you a video, I'd love to get you guys live so you can ask questions. Those of you who are newer, don't be afraid to ask questions. If I'm going over stuff and it doesn't make sense, then ask the question at me. Rowan, I know a lot of this for you isn't going to make sense at the moment, so
Yeah,
just try and absorb as much as you can because I know this
no worries.
strategy is very, very new to you, okay? So let's talk firstly about the fundamentals. Okay, so Today, we had non-farm employment change, so non-farm payroll, okay, which is the change in the number of employed people during the previous month. So this is basically how many jobs were created in the last 30 days, okay? It's a really, really important news event. It happens on the first Friday or second Friday of every month. I can't remember. It's always a Friday, and it's always I thought it was the first, but it can't be the first because it's the 10th today. But it's always at this point in the month. Okay, so keep an eye out for it. It's not typically a news event that you trade through. Okay, because the result can be wild, as we've seen today. Now, we already knew from our analysis that we were particularly bullish on the dollar. Okay, our analysis showed us very, very, very clearly that the dollar was ultimately very bullish. All of our analysis was showing bullish price action. Since the 7th of January, we've just been rising, rising, rising. We had obviously this pullback between the 2nd and the 6th. But, you know, look, if you look back on the higher time frames, the dollar is very bullish. The US economy is very, very strong. Okay. We had some really positive news with the FOMC and the rate cuts. The dollar is strengthening with Trump coming in. We got the inauguration on the 20th as well. Dollar strength is set to continue. Now, I had, as you can see, this 110 figure earmarked, really good psychological figure. So those round numbers, 110, those are the sorts of numbers where traders are going to be expecting price reversals from. So that 110 figure, is, I would say, is our next target. I don't actually mind that we didn't make it today. I don't actually mind that because that gives us a nice, easy target for early next week. So we didn't quite get there. But look, it is what it is. And hopefully we'll get there, obviously, over the next couple of days. Incredibly positive news. Okay. So last month's figures were 212. Okay. So last month's figures were 212. Why is that different from there? That doesn't make sense. I'm not sure about that. The actual figures from December were 227. Yeah, it is a week. I did think it was it a bank holiday on the 3rd last week? No, it wasn't. Why is it a week late? I don't know. Anyway, so December's figures were 227. Maybe there's been a bit of a change since then. So December's figures were 227. We had forecasted 164,000 jobs. Obviously, that didn't happen. That didn't occur. We actually created, or they created, say we, the US economy created 256,000 jobs. That's not a small number, guys. That's massive. And this all indicates how, well the US economy is doing. If we go back to let's just go back to the previous week. Where are we? So January the 14th. Let's go back a step. Okay. We go to our unemployment claims as well. So this was on January the 2nd. Forecasted 222,000 people in the US signing on for benefits effectively. They only had 211,000, which means less people were signing on for unemployment. Manufacturing is up, which is good for economy. It means there's less people that are signing on for benefits because they're unemployed. There's more people getting jobs, so there's more money in the economy, which means they're spending more. Okay, they're spending more, which means they're manufacturing more. And obviously we've got more jobs, more services. It's all really, really positive stuff for the US economy. Now, you may have seen my analysis, the analysis breakdown I posted today. Okay, that I got from ChatGPT. I've shown you how to do it, guys. It's really good for getting a good understanding of these news events. We had a massive proof. Now, non-farm payroll was the one news event that potentially could have fucked us today. It could have absolutely fucked us. For example, if these came out at 164 or less, then the dollar would have plummeted, especially with how high we are and how much liquidity we got sat below here. So NFP is one news event that you don't really want to trade within, okay? I had a few positions loaded up. I closed about 80% of my portfolio down before the news event came. I wish I'd held it now, obviously, but I closed about 80% of it down before the news event came because it could have done anything. Could have gone up, could have gone down massively. That massive move on the dollar, which was a 88 pip move on the dollar, which translated to a 97 pip drop on the Euro USD. That's a 100 pip move, guys. That's fucking massive, all right? And that could have happened the other way. So most of my positions, I had two positions on this one. I had, I think, a position hanging over from this one. Most of my positions are closed down, and the one I had left on this one, I halved, and then the one I had left on this one was only about 30% of the position because I'd closed most of it when we had hit like here the other day. Okay. So I partial out of my trades. The way I handle my trades is I partial out of them, take about 80% of my profit out, and then I leave the rest on because if, for example, it runs to this level and creates 5R, my 20%, let's say I've traded at 1% risk, okay, when I get down to 1.7, 1.7 times 80%. Okay, I've made 1.36. Okay, I've left 20% on, which now runs to 5R. So my 20% now gives me another percent. So I've made 2.5% out of that one trade. And I took most of my profit out on Thursday. And all I've done is I've just hold it for another day. Okay, so I always have a close target, which is there. And then I have a long target. Okay, I do that with every single one of the trades that I take. So that was kind of the fundamentals analysis, and the understanding as to kind of why that move happened. Fundamentals, something that I've just learnt myself over years. I watch loads of videos on it. I use ChatGPT now, and I get my understanding from there. There's loads of people who know more about fundamentals for me. For me, what's great about fundamentals is if I can line them up with my technicals. If I can get my technicals in line with my fundamentals, then ultimately I'm putting myself in a good position. Okay. For those of you who don't understand the difference, your technicals are like your price action patterns, the things you see on the chart, your lines, your drawings, that sort of thing, and the fundamentals are your news events. So if you can have them both lining up with each other, then they support each other, and then it can give you a better and more high probable outcome to your trades. Okay, so let's talk through USDCHF. Okay, it's a pretty simple trade. I'll show you how and where I took it and why I took it, and yeah, we'll go from there really. So as you can see, I took most of my profit off earlier. Okay, my profit was actually out of the trade before the news hit, and I'll be honest, I didn't actually hold it much higher. So I think my next target was, I think it was there, because I'd taken most of my profit out, and I wasn't sure what the news was going to do. So I'll be honest, I was watching EU and I kind of forgot about it. So I took my second profit out there. So I didn't actually make that much. I did have a target up here, which possibly I should have set my profit target to. But long story short, I forgot. And so I came out of the trade a full profit, came out of 1.77. I've got nothing left in it, USDCHF. Okay. I'll talk you through why I took it. So if we're looking at the marketplace right now, okay, as we've discussed, bullish dollar. Okay. So we're expecting the price to continue higher. Okay, we've got multiple trades here that have played out. So this trade on Monday played out really, really nicely, 2.95. This trade here on Tuesday played out really, really nicely as well, 2.48. And we're just continually pushing higher, creating new ranges and giving us new opportunities to get into the marketplace. Okay, now we had, and also the market's really efficient as well. And when the market's efficient, that means that there's the right amount of liquidity coming into the marketplace. There's the right amount of orders to push the market in one direction or the other direction. And then let me just read you this message. My apologies, Chris. I didn't realize it was my birthday until this morning. My family have turned up. I really want to catch up with you. Could we reschedule? I didn't realize it was my birthday until this morning. That's an interesting one. Not heard that one before. Anyway, gives us a bit more time. Okay, so let's have a look. Now, this trade idea, just so you know, this trade idea was generated from where? Where does this trade idea come from? You can tell me.
Well, we can see the Asia swept the sell side liquidity first.
Yeah, yeah. So that's intraday where it came from, but where is it originated from? Where has that trade had its fuel come from? Where is the momentum, should I say, come from?
Daily, like, yeah.
Oh, there you go. So Remember, I want you to start thinking from a higher time frame perspective always, okay? You want to be thinking about where liquidity is being taken because yes, you're absolutely right, Ben. We're looking for liquidity on our lower time frames to fuel us into the move that day, but the momentum for that trade has to come from somewhere. And if you go to something like the 4 hour time frame, you can't see your Asia range being swept anymore. Okay, so what we've got to look at is we've got to look at where that momentum's come from. And as Lenny quite correctly marked, we had a beautiful daily sweep there. Okay, now that daily sweep doesn't give us anything. Okay, that daily sweep there gives us fuck all to work with. Okay, all that is, it's no different to that when that occurs. Okay, it's no different to that when that occurs. Okay, when these lows get swept, okay, it's not about the sweep itself. It's never about the sweep itself. We don't need to know which liquidity is going to react. We don't need to know which liquidity we're going to use. What we need to do is we need to trade the reaction from that liquidity. That's all we care about. So that liquidity move happened. Okay. We then had a really strong reaction from it. A little bit of hesitation, a little bit of a pullback. If we have a look at our 50-minute time frame, you could argue that that's equal highs, but in fact, I think I did this the other day. I think it is actually equal highs. Yeah, it is. Okay. I think I remember doing this the other day. So this is equal highs. Okay. This is therefore our first break. Are we now bullish or bearish? Here. Are we bullish or bearish?
Bearish.
Bearish. Why?
Because it's only a first break, we're not a true break yet.
Are we in line with higher time frame momentum?
No.
So higher time frame momentum. So if we look at our 4 hour time frame, oh shit. If we look at our 4 hour time frame, are we bullish or bearish?
Okay, yeah, bullish high time
Bullish,
frame.
yeah. So remember, we only need the first break to confirm it if we're in line with our higher time frame momentum. We've had, and also the strength of the moves is really important as well. So this reaction, that's not a normal reaction to a liquidity point, right? Okay. You see these sort of reactions and this sort of reaction here, those are normal liquidity. That's not a normal reaction. That shows how willing prices or how willing the dollar is to go bullish. It's like it's leaning over the edge of a cliff, right? And all it needs is a little push and it's going to fucking fall miles, okay? But up. It doesn't make sense, but you know what I'm saying, right? It's like it's stood on a massive fan. Somebody's just switched the fan on. And it's just blown. No, that analogy is not working. We'll move on from the analogy.
Turn the gravity off.
Turn the gravity off, yeah. And you're in a rocket ship and Elon Musk has lit the fuse and
Check, I've got a quick question before you move on, though.
yeah, go for it.
Are you not considering that a first break on that time frame? It's like subjective on there, right? On the 15M time frame.
Yeah. Do you know what? Yeah, probably.
It's a tough one. I'd rather have like a nicer move, right?
Yeah, I'd rather have a closed candle. So the 5-minute chart has definitely shifted.
Yeah.
The 5-minute chart, look, you can see it very clearly. Definite, lovely shift, and that's why. We use these time frames, right? Funny enough, I asked the question earlier. It wasn't anything to do with this meeting tonight, but I asked the question earlier about, what's your favorite time frame? I was just genuinely interested. I wonder what people's answers were. And we use the time frames, but why do we use 5 minutes? Why do we use 15 minutes? Like, why do we use specifically those numbers? Why don't we use 3.7 minutes? Why don't we use 8.9 minute charts? Well, just because it's a round number, right? It's easier. But the market's not working like that. The market's not working on round numbers, okay? And you might find the perfect entry model. You might find the perfect MSU, for example, on the 7.3 minute chart, okay? We use round numbers, and sometimes you have to take like the average of two charts. So for me, my favorite chart's the 3 minute. And I love the 3 minute chart because it gives me a view on both the 1 and the 5. That's the reason why I like it, because I feel like I can see both the 1 minute and the 5 minute playing out at the same time. So I'd be looking at this. I'd be looking at that 5 minute first break, okay, or we'd class it as an internal break to a 15-minute chart. So it's a IFB on a 15-minute chart, and it's a FB on a 5 minute chart. So we class that as that, right? Therefore, we've shifted bullish, and also you've got to sometimes just look at the strength of the move. Like that's not normal. That's not a normal move. And yes, it might have been news related, but then we haven't come back down to retest any of this area. So for me, I'm looking at thinking, right, there's a load of fuel in this move. Okay. I already know fundamentally that I'm bullish. I already know that I'm expecting higher prices. So I can now start looking for trades and I can start assuming that we're going to go bullish. Now, I personally didn't take a trade here. Okay, I could have done. In hindsight, there is a trade there. It's definitely one that I would probably mark up and put in my journal. I think actually I did. However, it's not yet for me confirmed bullish on the 15 minute. So there was a very real chance that this could still push down because up until this point, okay, up until this point on the 15 minute chart, are we bullish or bearish?
Bearish.
Bearish, right? We're bearish on that chart right now. So we don't really want to assume. I had a conversation with one of the guys who's not on this chat tonight, and I was saying, you don't want to speculate over the marketplace. Your job isn't to be a data speculator. Your job is to be a data scientist. You're not here to try and put your expectations on a market that you know is going to try and screw you over. Because I'm sorry to say it, guys, but none of you historically have been profitable. That's not me being horrible. That's not me, and I'm just stating a fact, right? Okay, you guys and me in my entire trading career, I have been unprofitable more than I've been profitable. Okay, and you guys the same. You've been unprofitable more than you've been profitable. So what does that tell you about your speculation?
It doesn't work.
Yeah, it doesn't work, right? Are you a good data analyst? If you look at your past results, are you a good data analyst? No, right?
No.
Historically, your statistics, your data shows me, you, anyone else, and this is again, I'm talking like literally. If you look at the data historically, your gut feeling on things, those moments where you've sat there in the trades and you've been like, oh, I just feel like it's going to go in my direction. That gut feeling, most of the time, has been wrong. Okay, which is why you're not quite yet at the profitability that you want to be. That's not me being mean. That's just me stating an absolute fact. For me, most of my trading career, I've been unprofitable for most of it. I'm profitable now, but I spent 6 years fucking losing money. So I got to a point where I was just like, stop fucking speculating, stop expecting the market because you are a shit analyst. You are a shit analyst. You don't fucking know shit, and your gut instinct always fucks you over. And every time you feel like you see something, it never fucking happens. It never plays out correctly, and you keep losing money. So you're shit at predicting the marketplaces. Stop predicting the marketplace because you can't fucking do it. Right? And that's kind of the mindset that you need to have, is that yes, that looks like it could be a really nice bullish setup. And yes, we've had a first break, but I didn't take it because I was looking at thinking, well, I've not taken the key liquidity. All I've taken out is some like internal liquidity, and there's not going to be many orders sat there. So really, I would need the external liquidity down here. So I waited until we got that break. Okay. And then we had this lovely little range. So it was a nice little 5 minute range here. Okay. Lovely little 5 minute range. So that, I'll put the replay tool on so you can see it. Okay. That little 5 minute range, we had a nice little push up. We then had a pull back into the discount area of the range. And if you look on the 1 minute chart, you've got a lovely little MSU there. Okay, lovely little MSU engulfing. And then obviously we just held the trade up. Beautiful little trade. Played out really, really nicely. First profit was off there, 1.65. Final target, 2.53. Okay, really, really clean. So I'm looking at USD against anything. I'm looking at the dollar as a whole, and I'm just looking at it, and everything just feels really bullish right now. And, you know, how many times would you have sold from here previously? How many times would you have seen price come into this area and maybe even sweep that liquidity point and see that little breakdown? How many times would you have looked at that and started expecting price to go down? A lot, right? That's how we all used to trade previously. Yeah, you start expecting the price to reverse. This trade's really, really simple. Okay, we very, very simply create a bullish structure. So I'll show you here on the 5 minute. So structure, boom, 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 boom. Okay, cool. No, I mean, you can probably see it yourselves now, right? First break, true break. Okay, so now our momentum has shifted. Another true break. Okay, which means we're now bullish on this time frame. We're now bullish. Okay, price is efficient. That EPA level, price has been made efficient. So we've got no reason to come down any further. So if we look at this as a range, I'm just going to move that over there. Okay, if we look at this as a range, okay, once we've come down into equilibrium, which is here, so we've come down into halfway of the range again, we're in that equilibrium area. Okay, we can start looking for long positions. The reason why we trade in our time zones is because that technically gives you a nice long position, but it's at 7 o'clock at night. The liquidity is low, the volume's low. London is the biggest trading session across the world. Despite what you're told, despite what ICT preaches, London statistically is the largest trading session. More trades are placed during London than any other trading session in the world. Okay, so even though that's kind of afternoon in America, London's closed. Okay, so for us, we're not interested in trading at these times. It's a shit time to trade. You're gonna lose money. Okay, we're looking at this trade here. Push, 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 push. Okay, I don't know why is that on my chart, by the way? Because I definitely didn't take that trade. What is that? I don't know what that is. We had a changing character here, or changing character. That's because I've been thinking about SMC stuff. We had our change in momentum here, okay, and then we came down. We created EPA. We came and then swept that EPA level as well. Brilliant. First break, true break, true break. That's at 7 o'clock in the morning. Then we came down, false break. Yes, I could have done a tighter stop. I wasn't interested in sitting and watching and managing it, and I might have been swept out anyway. So I just did the low. I just did a classic ISC 1. Sometimes I'll do an ISC 2 if I'm feeling really fruitful. I think for me, when I was looking at it, I was thinking it's quite high up anyway. So we do have a higher chance of a deeper pullback. And we did get a deeper pullback, as you can see. That FB that was created there, that you can see really, really clearly, gave us a trap. Trap was tagged once, trap was tagged twice, and it eventually broke then this morning. Okay, so it's just, look, there was no secret to this entry, and I don't know if, Anton, you kind of asked the question because you couldn't work out the entry or you just wanted an explanation. This is the strategy playing out in its purest form. Like every element of the strategy in this trade, everything you need to know.
A beautiful trade.
Thank you, man. Appreciate it. You have beautiful hair.
Sometimes.
It was just like everything just played out perfectly. And do you know what? I was really confident on my bullish bias. Yes, I could have taken some more profit off at the trap. I didn't quite get my first entry, and then when I saw it kind of coming up again, and then we're coming into the evening session, I thought I'll hold it to the top of the trap. Probably a mistake in hindsight, to be fair. By the time I got to the morning, I saw that we'd taken out some internal liquidity. We started pushing higher. We had this little bit of a pullback, and by this point, I was kind of. I'll be honest, I was committed to the trade. Again, I should have probably taken some profit out there. I was just really, really confident on bullishness on the dollar. And I thought it's gonna get to my TP1. It's gonna take that level. It's not gonna keep tagging this and not coming up any higher. And obviously, we did then take that TP1. And then, of course, we took TP2. Obviously, I made a bit of a mistake with TP2. I think that level will probably be hit over the next week. But I would have had to hold it over the weekend. I'm not fussed about doing that. Anything could happen. There could be a missile strike over the weekend in the US and the dollar would fucking plummet. So it's one of them. I took my profit out. I got just under 2% out of the trade. Look, ultimately, I'm really, really happy with the result. And I didn't have a trade which I had to then panic about during NFP either, because it was up here during NFP. I knew that if it was going to drop down, it would just take me out for break even. It obviously didn't. It shot up, and look, the rest is history. But yeah, look, there's nothing special about this trade in particular. Every element of this trade, other than the fundamental stuff, which is obviously some new bits that we're going through together. The theory of this trade, the technicals of this trade, is all in that November boot camp and the previous course that we've done. So yeah, it's just a good example of just being patient. There's times where here we could have taken a trade. Yes, it would have worked out. There's other times where we take a trade like that and would have failed, like this one. Okay, because outside. Look, I think sometimes, how many times as a trader per week do you think you break your rules? Honestly. Do you reckon, guys? Get your mics on. Just shout out numbers. How many times per week do you reckon you break your rules?
A few, I reckon.
Yeah.
Yeah, I feel.
Yeah.
But I've got a question as well, because I would, like, trading around this area, I would be worried that we're in like the premium of the higher time frame. So even
Yeah.
if you've got a bigger, higher time frame range,
Yeah.
you know what I mean? Even if you're using this one, but it's hard to get your head around. Like, obviously, if it's going to go take the high, then it's going to keep trading up.
Yeah.
It's
So
going to go back all the way down into better pricing for a better long, which has already happened essentially, right?
yeah, I get what you mean. So
Yeah.
when you are in larger ranges like this, because this is technically the range because we haven't shifted momentum. Okay, so that's technically still the bullish range that we're in. But you could say, let's for argument's sake,
Yeah, even on like on a higher time frame, it's going to be that low, right?
yeah,
Like
okay.
the real
Let's say
swing.
that's our daily range that we've then swept external and then pushed up higher on. Okay. It really depends on the scenario. It really depends on the scenario. And I think this is where experience is really, really helpful. When I was looking at the candle formations, I didn't look at any of this and think it was going to shift bearish, if I'm honest. And I knew I had a really strong fundamental backing as well. I think that's what's, do you know what, to be fair, that's what's one of the things that's really bolstering my trades at the moment is I'm spending loads of time researching the fundamentals and I'm using them to support my trades. So that's really, really helpful, definitely. If you are in the premium of a higher time frame range, yes, you're right, you do have to understand that it's a riskier trade. However, I always go back to the fact that I would have previously been expecting shorts, and normally I would lose the trade. And when you're looking at liquidity levels like that liquidity level here, okay, there'll be loads and loads of times where you'll have waited for price to get to here and you will have used any reason to short from here, and 9 times out of 10 you would have ended up losing. Same for this one here, you would have ended up losing. Same for this one here, you might have got a little bit of profit off. This one here you would have lost. Okay, if you go back and look at swing highs, it's not often, if you're in line with momentum, it's not often that price will then take that swing high and then immediately reverse. That one is just a correction, as you can see, to take out more liquidity to go higher. So, if you're confident enough in your momentum, you've got lots of confident factors on your side, buying in like higher time frame premium, if you've got enough confidence to support it, I would support your decision.
Yeah.
Okay.
And especially if you go down into the session as well, right? Then you play in the lower time frame.
Yeah, exactly. Because this is a large range, right? This isn't like sometimes you'll get a 4 hour range and it might be really tight. Okay. Let's say, I don't know, let's say it's like this one to this one, for example. Okay. And do you know what? Selling from here to here, you are probably making a stupid decision because you might be lucky if you get a 1 hour trade out of it. This, however, was a nice, decent 2 hour. In fact, I must have a tight stop because I'm not sure. I can't remember now. I play around with these trade tools all the time. No. I was confident on dollar move. I took the trade, and yeah, I remember now. I was confident in dollar move. I took my trade. I looked at it being 1.4 because I remember this now. I looked at it being 1.4. I acknowledged the fact that it was slightly less than 2, but I knew that we had loads of room to maneuver, and I was happy to take the risk, and I was expecting to take most of my profit off on here anyway. So yeah, look, I would like that prefer it to be a 2 hour trade. And you know what? Maybe I should have tightened my stop, but I left my stop wide and accepted a lower RR because of the fact that it was high up. So that was kind of the reason why I did that. But look, it played out really, really nicely. Maybe in another situation it wouldn't. But I'm a big believer these days is when the sun's shining, just make hay. If you've got all this bullish price action, just every opportunity you can logically to get into a trade, jump on and try and jump into it. I would. All right.
Yeah.
So I'm going to be on tomorrow. I'll be doing an end of day markup. I'm not sure what time yet, but I'll message you guys. I think I got calls in the middle of my day, and then I've got a gap in between. So I'll have a look at my diary later, and I'll plan it into my diary. And we'll jump on doing end of week markup at around lunchtime tomorrow. Okie dokie.
Happy days.
Cool. Any questions, guys?
Yeah, just one quick question I sent to you earlier. Would you, if you remember it I'll put it on the chart analysis, just write it up, mate, if you want instead. Well, I was going to just say, in terms of if you miss your first entry,
Mhm.
are you still looking for, based on the M3, are you looking for further entries down the line?
So let's say you entered. Okay, so let's say you missed this entry, for example,
Yeah.
and it went off without you, and then it
And
came
you
back.
still,
And
yeah,
took that.
exactly, yeah.
Will I enter again?
Yeah, or in terms of, say, if price leaves you,
Yeah.
so it expands. Are you still looking for a further entry a little bit later down the line? So say like on your trap here.
Maybe.
Yeah,
Maybe like this one, for example, no, because it's taken the trap. It's very high up. So if I'm
yeah,
looking, I'm coming back to our conversation just then about ranges. If I'm, let's say this is our trading range, for example, then my trade's in the premium of a minute's range. So this is like a 1 minute, 5 minute, 15 minute maybe range. No, I wouldn't buy in premium. But if I'd missed that entry and I saw price come down, take some more liquidity, create some new structure, and give me another MSU, would I enter there? Yeah, all day long.
yeah.
Because
Okay.
the logic behind my trade hasn't changed. Okay. Yes, it's maybe a slightly higher risk. But yeah, if I miss it's a really difficult question to ask because it really depends on its individual circumstances. If
Yeah,
the
because I
trade
mean,
is
looking at that,
pulled
would
back
that not be like a true break? You see what I'm saying? So it'd be like a true. I probably wouldn't have entered that.
yeah, I see. Yeah, do you know what? Actually, fair enough. No, yeah, you are right. That is actually a true break. So yeah, you probably wouldn't enter on that one. Um, let's say you were looking at entering here in that low. Okay, you've created a new range, then you come down. Let's say this is a 15-minute chart, for example. Price up, pull back. You miss that trade. You have another range created, and it creates a new trade. It's still within the higher time frame momentum, but it's created a new range and then gives you a second entry. Yeah, all day long. And those are
Yeah, sweet.
really good positions where you might take one position here, okay, and then you're holding that one up, and then you get a second entry here, and you can hold that one up, and that's where you can start then like what's called pyramid into trades, where you start adding in additional trades onto the same trade idea, okay, because the consensus is still the same. So all of these trades then you can kind of max out and try and take multiple positions. The risk of it is you get stopped out on one or two of them, okay. Okay, and let's say you took another one here, for example, that one would have been stopped out, so you'd have lost that one. Okay, but these three are still in. So you have to understand that the risk profile changes. You're effectively now risking 4 positions. So do you quarter your risk on each trade as a result of it? Do you accept that you're only going to take half positions because you're going to be entering potentially 2 positions? Something that I used to do quite a lot is I would take 2 positions. I'd enter one on my first entry and I'd wait for confirmation or a further confirmation, and I'd take a second position on another half, which is great if the trade works out. But if it fails, you're losing effectively 2R on a position. Even if you divide your risk by half, your risk is still divided by half, but your risk is still 2R because it's two halves. Okay. And your results are only the same. Your results are only relevant to the value of your stop loss, right? Remember? So yeah, it's one you have to have a lot of data on, a lot of testing on. Nowadays, what I will do is I'll take one position. Okay. I'll take most of my profit off, say at my first target, and then I'll hold for, my potential final target. And then if I get a separate position in its own right, I'll take that as well. Okay. But I'll try to avoid, unless it's, if something's looking really, really clean and everything's playing out really, really nicely, I'll add in a couple of positions. Like I had 2 on this one because it just looked so good and everything was in the right place. But I would, for the time being, probably just have one position on a trade. And I would only probably take a second entry, Jason, if the market really gave you that opportunity. Like that's a really good example of where the opportunity might have been there. Cool.
Probably. Yeah, cheers, mate.
All right, guys. Well, have a lovely evening. Enjoy your Fridays, and I'll see you all tomorrow.
Thanks for that.
Cheers,
Good
Chris.
stuff.
No worries.
Bye.
See you later. Bye, bye, bye.
Bye.